Hello and welcome to the Capital Call. What is this, lucky number episode 13, I think?
Something like that, allegedly.
Yeah. If you might notice, if you're watching the video, we just decided we're so close, we'll just have one mic, no headphones. So we'll see how this turns out. If if it didn't turn out well, you'll be hearing chalkboards in your ear right now.
Yeah, either that or we'll put the headphones back on with our next podcast. We just decided there wasn't really much of a point. And besides, this way you get to see my beautiful hair in full HD.
Plus, editing it was a nightmare with echo. But we've got a lot of interesting stuff this week. And for those who don't know, stick around to the end of the episode. We got a really interesting This Day in Economic History for June 27th that Drew is currently unaware of.
As I always am. I'm always looking at other things, not paying attention to what's going on around me. What day is it? I'm not even sure.
But we will all soon find out together. So be a good surprise. And I wanted to start this off. We actually had our webinar on contrarian investing this morning that I thought went quite well. And we hope to have you guys for another one here soon. We'll keep you posted. And I'll leave you with a quote. To quote Warren Buffett, price is what you pay, value is what you get.
Yeah, it's got to be one of his most quoted quotes, too. But we really did go over one of Warren Buffett's early trades that constituted, I think at one point it was like 40% of his portfolio. It was probably over 50% at the peak. But
yeah, and then we went over a few of our own examples, so kept it interesting.
Yeah.
But to get into this week, of course, it's after the close, and we got July 4th next week. This will come out on Monday, the 30th. Top of mind, Canada trade dispute I do want to get to, but I think a little bit less reported, the Russell reconstitution is going to be in effect Monday morning trading.
It is, and it's a huge deal for companies to get added to the Russell 2000. There's like over $200 billion in volume that trades based off of a reconstitution like this, and they are going from will be the last year that the Russell is being reconstituted on an annual basis. Starting in 2026, they're going to be going to a semi-annual reconstitution basis. And, these things are very finicky. The only reason the Dow even really still exists, because it's not really that useful of an index. There's only a few dozen companies in the Dow Jones, but it continues to exist because of its historical significance and then also just the amount of money that trades on the Dow. It's kind of hard to get rid of once you have it, and every index is like that to a certain extent.
Yeah. And for those who don't know, the reconstitution is essentially the rebalancing of what the index represents, right?
Right. I believe they're adding about 28 new names to the list.
Yeah, and 7 IPOs as well as to the Russell 2000 and 6 to the microcap index.
Yeah, these reconstitutions are a big deal for these individual companies. They do tend to trade at a larger premium post-reconstitution, so we're expecting a lot of capital to move on this decision, which is why they announce these things months in advance. They do it very slowly, very methodically to make sure that the messaging is all out there. No surprises, so to speak.
Yeah. But Canada, our good friends up north, and this happened just today. They apparently continued with some law regarding digital services tax that the Trump administration thought that the new Canadian administration would at least pause or something.
There's a 10% digital service tax that they're deciding to go forward with in Canada. And a big reason why Trump appears to be pissed off about this is because when you're talking a digital service tax, you're essentially talking about taxing e-commerce companies, which in turn mostly means U.S.-based companies.
Yep.
Trump accused Canada of going the same way as the EU, where the EU has kind of cracked down a lot of internet service providers, which because Europe doesn't have that many domestic internet service providers, that the default is that means that they're taxing U.S. companies. So it's interesting to see him get very, very protective about these information giants that we have. And it's also not great for the market right now because he's essentially made very, very vague threats. And he's saying that he's hung up the phone, they're not going to talk anymore, and there's going to be some sort of reaction happening in 7 days. I mean,
yeah, they're going to get a detail of what the I guess retaliation is going to be. But this is a similar thing that the EU did that the administration didn't like either. And it's interesting to note that in the trade imbalances that they did with the Liberation Day retaliatory tariffs, it was trade imbalances of goods, whereas we often have a surplus of services with other nations. And so, the idea that a services tax would be put on, I think, is kind of maybe a strategic screw you type of thing.
It seems very, very intense of a reaction for what appears to be a relatively minor event. We've kind of seen this repeatedly. I don't know if you remember, Trump kind of made the same reaction to value-added taxes that are more common in the rest of the world. We don't have as many of those here. They're essentially an internal sales tax, but they've been frequently mischaracterized by the current administration as a form of trade barrier. And you can kind of make that argument, again, if it targets an industry that is not primarily domestic.
Yeah, I think their biggest citation of it being a trade barrier, at least that I've seen, is in Germany, the VAT tax for foreign cars is higher than the VAT tax for domestic cars.
Well, you see, but that effectively functions the same as a tariff. That is, in effect, a tariff.
Right. So that's what they deem a trade barrier, right?
Right, which is what we do also. I mean, that's exactly what we do with our car imports. If you're over a certain percentage of foreign parts in a car, you get taxed. Although they are getting rid of the emissions regulations, or they're attempting to in Congress. That's an act of Congress, though, so it's been interesting to see.
It's an act of Congress.
It's an act of Congress. Really, it's an act of reconciliation. Congress is weird. In order to pass substantial changes...
So are the people in Congress.
Well, yes, of course, that's a given. But, in order to enact big changes, like actually properly changing tax law, they have to have a certain number. I think it's like a supermajority of 60%. And that's just off the top of my head, just to clarify for anybody listening. But the point is that the Republicans do not have enough of a majority to formally pass tax laws. So What they do is that they add amendments to reconciliation bills, which can be passed by a simple majority. And there are limits as to what changes they can make in those reconciliations. So in this case, they got rid of the emission standards and fines by changing a 1 to a 0. They make every company do the calculation of how much they missed emission standards by, and then they multiply that figure by 0 at the end, meaning they pay nothing. So that's effectively a backdoor way of getting rid of the emissions penalties.
Yeah. So what does this mean for your portfolio? Well, it depends if you're invested in Canada, I guess. But it basically means that they're trying to break down the NAFTA or USMCA between Canada. I mean, I presume he's going to have some kind of retaliatory tariff.
I mean, this isn't great. I mean, Canada can just straight up cut off electricity to certain parts of the U.S. if they wanted to. Like, it doesn't benefit anybody to really be doing this.
I mean, Canada's a great trading partner.
Yeah, they are among your neighbor is always going to be your largest trading partner. The idea that you can have a totally insular economy is just, we've been over this before, but it's just hack science, hack theory. It's been disproved over and over again, but it's very seductive because the idea is that we can be strong and independent and then we don't have to listen to anybody.
And it seems like, to some extent, the administration was getting what they wanted out of a lot of these foreign trading partners, and it seems like it's a very personal overreaction to a very minor item that wasn't even actively sought out. It was just something that was already approved by the previous administration that was set to go in effect.
That's why it's so odd, because I mean Canada has basically, to Trump's credit, caved on a lot of items.
Yeah.
They've upped their percentage of GDP spending on defense, for instance, which was a big demand of his. They're up above 5% now. So
yeah, I remember seeing NATO. He kept saying that Spain was the only one that refused to do 5%. They did 2% or 3%. I can't remember.
Yeah, but this all kind of ties into. This actually ties in fairly well to the other thing I wanted to mention, which is that I don't know if you noticed, there was a GDP revision for the Q1 numbers.
Oh.
For those unaware, when we get the quarterly gross domestic product figures from the Bureau of Economic Analysis, they do revisions after the fact because they get the initial numbers out and then they go back through them and they say, well, actually we got some additional figures in and it turns out we're going to revise this a little bit downwards. There's nothing untoward about it. It's actually very good that they do this. That means the data is more reliable. What we saw in the Q1 data revision was that they revised downwards from negative 0.2% to negative 0.5%, which is a very, very significant revision.
Yeah.
And again, this isn't news, but I just want to keep hammering. A big part of the reason why it wasn't worse is because a big part of the reason why it was negative is because you had these massive import effects. So when you're calculating GDP, exports are additive and imports are subtractive. Because it effectively means that you're having to, you're not producing these things, right? Gross domestic product, it has to do with production. And what you're seeing from that is that the reason this happened, and like a huge part of that GDP was a massive boost in big inventory equipment spending by companies trying to get out ahead of the tariffs. And they're working through those tariffs, those pre-tariff inventories now. And by most estimates, you're going to, and I'm starting to see more definite estimates as to when companies will run through these inventories. You're not really going to see the full effect of running through those inventories until about Q3 or Q4. And in Q2, you're going to get a bit of a hangover, but it's not going to be the full effects. Because imports should drop off a cliff, which actually has a positive effect on GDP because, suddenly you've got more exports relative to your imports. So we're not going to know the full costs of the tariff war until then. But
we may never know.
We may never really fully know. As with many things in economics, it relies on good, consistent, real-time data collection.
Well, here I have a solution. What we do is we have to replicate the globe on another planet and recreate everything that's happening currently as a control and don't put on tariffs and then see which one is different.
You joke, but you've just described every economist's wet dream. It's, it's like the old joke, like every linguist secretly would love to just to take some children away from their mothers at birth, put them in a room and see if they develop language on their own. But they don't do that because that would be incredibly cruel and it would be torture.
Actually, they did that once, I think, in Germany. And long time ago.
That wasn't a scientist. That was a noble person. That was crazy. And that doesn't count.
And I think the children just died.
Yeah, they did. They died.
Yeah.
It's funny how when you don't take care of kids, they tend to die. But anyways, less depressing things. Nike also reported.
Yep.
I don't know if you saw that.
Oh, yeah. They were up, at least midday, I saw they were up like 16%. I don't know what they closed on.
They closed up around, and I have it in my notes, $72 around. And they were actually a little bit higher during the interim trading, intraday trading.
Love a good Oregon company.
Yeah, you love a good Oregon company. God knows they'll probably leave Oregon when Phil Knight dies. But
Uncle Phil's never going to pass away.
Uncle Phil is going to live forever.
It's true.
It's a classic story with Oregon companies. We have a lot of companies that, most of our public companies are companies that were founded by somebody locally that just refuses to leave the state. And not to brag, but Oregon's a nice place to live. So they don't want to leave. It's the same reason we're in Oregon, even though our council and other advisors sometimes advise us to move to somewhere like Florida. I refuse to live in Florida. No hate to Florida. I just like it here better.
Didn't work out for Borsno Dutch Brothers, though. He still lives in Grants Pass, but he moved the headquarters to Phoenix. Yeah,
that's an interesting story. I think he just got frustrated after his pony race deal kind of fell through.
Yeah,
he got a lot of heat from the local tribes, so he lost his permitting for the gambling machines he wanted on site. So,
well, that's another story.
That is a whole nother story, which we're not going to get into.
But it is a publicly traded company. Interesting.
It is a
IPO.
Yeah, it's moving to, I believe, where was it? Arizona or New Mexico?
Yeah, Phoenix, Arizona.
Phoenix, Arizona. That's what it was. But yeah, I mean, what I find interesting about the June 27th earnings report from Nike is that the reason it's trading up so huge and is counterintuitive for some people. Nike reported not great results, but it was better than people were expecting.
Yeah, because people were really concerned about their supply chain that's very Asia heavy.
Yeah, they get 16% of their inventory from China. 16% of their production is in China. And right now the company is in the middle of a transition plan to get that down below 10%. And they're shouldering a lot of those costs in the first half of the year. So it's It's, companies tend to get punished when they do big transition plans like that because Wall Street, of course, likes to see infinite profits forever with no problems.
Yeah.
But, you do have to bite the bullet and make the hard decision from time to time. So it's actually very good to see a company make that decision for long run performance, right, at the expense of some short-term profits.
Yeah. Performance being a pun intended for the performance gear.
Yes, for the performance gear. But they are seeing about a 0.75% margin decline. Gross margins decline just from the tariffs alone. They're expecting about $1 billion impact.
I was going to say I saw that it cost them $1 billion. It's a lot of money for a company, but not that much in revenue.
No. And again, this goes to show like our American companies are shouldering these tax costs. Now they are, to the administration's credit again, actually moving their production away from China.
Yeah.
So it's in that sense having the intended effect. It's just going to be expensive for everybody.
Now, one thing a lot of people are talking about is the Fed, obviously. People love to talk about interest rates, and there's a lot of technicals we'd get into, but I like a story. This guy shared this story about LBJ on CNBC earlier, that this kind of behavior where the president is telling him that he's got to lower rates and talking about a shadow governor, all this stuff isn't even the half of it. If you look at historically, LBJ in 1965 took then Fed President Bill Martin to his Texas ranch, shoved him against a wall, and this is a theme, he's done this to multiple people, shoved him against a wall, punched him, and said, "My boys are dying in Vietnam, and you won't lower interest rates."
Oh, wow.
And Bill Martin
That is such an LBJ thing to do.
Yep. Bill Martin did lower interest rates, but then he said he wrote in his memoir while he was on his deathbed that he always regretted it.
Really?
Yep.
Okay, well, I mean, credit where credit's due, I guess. He was at least remorseful.
No, not LBJ, Bill Martin.
Oh, okay, well, never mind. He was remorseful
for having given in to LBJ's threats.
Oh, okay. All right. Yeah, that's fair. That any Fed governor should really be kind of ashamed if they give in to political threats.
Yeah, and they're always, everybody on both sides are bullying the Fed to lower interest rates or raise interest rates, and it is the Fed's job to ignore them.
Yeah, and again, like, if you don't want to wind up like Turkey or Venezuela with hyperinflation or consistent, huge inflation. Turkey right now is sitting at over 30% inflation. And you have to have an independent Fed. You just cannot get around it. Like, I'm seeing economists that I like to listen to wringing their hands saying, "Won't somebody listen to the economists? Don't screw with the Fed. It's the way it is for a reason."
Speaking of Turkish interest rates, to follow up on what we talked about last week with 30% Fed rates, the 2-year treasury in Turkey, which you can get in lira or foreign currency, is like 42%.
Yeah, I remember I was looking at their bond rates, and I must have been looking at their lowest yielding short-term treasury rates last week when I was looking in the back of my Economist. It's kind of insane how much they pay on their debt in that country. Not a lot of confidence, of course, in the Turkish government issued debt, but hey, you get a heck of a return. It's just that the inflation inflates it away faster than you can get it, Your real rate of return is going to be that coupon rate minus the inflation, which means that if they're issuing debt at 40% and their inflation's at 35%, you're really getting a 5% yield.
Yeah.
That's how that works. That's why they have to pay so much. So, the Turkish government's being forced to take out credit cards, but they're printing money fast enough that they're actually still getting a kind of decent rate. But eventually, it would be better if they turned off the money printer.
Yeah.
There is something known as the inflation tax. I remember specifically economists studied the Balkans was one of the first examples I can remember that they studied for this. What happens when a country can't cover its obligations and they print money is effectively you're taking money out of people's pockets because the government's share of the let me put it this way. There's a total amount of currency in circulation, right?
Sure.
When the government prints more money, their slice of the pie stays the same or goes up.
Yeah.
What happens to everybody else's slice of the pie?
Goes down.
Gets smaller. Their money, they have the same amount of money, but they can spend less, which means that the government is, in effect, taxing people by printing money.
Yeah. Speaking of printing money in bonds, it's crazy that the Russian government, I mean, to be expected, I suppose, but crazy that the Russian government couldn't sell all of their treasuries.
Oh, yeah. I've been watching this for a while. Every year, the government central bank the government basically sets a target for how much in debt they need to issue to cover the government's spending, which, as you imagine, in the middle of a war, it's kind of high. The government has been doing all sorts of weird things over there to avoid paying out parts of the federal budget that it would rather not spend on. But the interesting thing that has happened with their bonds is, for the longest time, the Russian government was really resistant to issue variable rate bonds, which, for folks that might not know what that means that, the interest rate is whatever the market sets at the time that they have to pay. And investors like this because it's a certain degree of certainty that, if the bond market gets screwy, they still get the same real yield. Remember what I said before with Turkey. Your real rate of return is just your coupon rate, the interest rate minus inflation. So that when you make the interest rate variable, that means that if inflation goes up or something, you still get the same real return.
Yeah.
But it's a kind of a raw deal for the government because they wind up having to pay more if they screw up, which would seem to suggest that the Russian government expects the debt situation to get worse, or at least it's very worried about what will happen if the debt situation gets worse.
Yeah. And didn't they force the banks to buy it or something?
They did. There's really not necessarily that much in the way of independent private entities in Russia.
Yeah. Go figure.
I mean, they keep playing games with the National Railway Company. This is a personal fascination of mine. I want to be clear. We're not invested or exposed to Russia really in any way, but watching what happens over there with finance is just amusing because everybody's lying to each other constantly. They're lying to the people. They're lying to other government ministers. The central bankers are doing their best to hold everything together with Scotch tape.
The head of the Russian rail transportation said that if anybody quits, you'll be shot on sight.
And they're paying them less than... you just get paid terribly if you work for the Central Russian Rail Company. I feel bad for these guys, honestly. They're specialists, and they can't hire anybody new, and the guys that are there can't quit.
Yeah, the next time you think, the Russian government wouldn't do that. Oh, yes, they would.
Yeah, anytime you really hear the Russian government say anything, you can almost assume the opposite. Yeah, but it's not really surprising that they've been having trouble placing these bonds. The Russian central government has been putting a lot of pressure on the Treasury not to issue really high rate bonds, which then leads to unrealistic expectations. Yeah. And what's even worse is sometimes what you've seen in those government bond auctions is that you have seen the central government try to think they have successfully placed bonds. And then it turns out that the domestic banks that were forced to buy them actually don't have the capital to buy them, and they break the trade, which would be unheard of in a domestic, U.S. bond market.
Yeah, imagine J.P. Morgan doesn't have the money to buy federal treasuries.
Yeah, I mean, that's just another level of insanity. But governments, I say all this, Russia is not an imminent collapse, and governments can just go a lot further than you would expect because a government can't fail. What happens when a government goes bankrupt? It ceases to exist? Not usually. And in fact, even if a government does cease to exist, usually some entity goes on to inherit a lot of the debt that they happen to have accrued prior to that happening. But, Russia is just a black hole.
Yeah, it's interesting, you bring up historically governments, even when there's regime changes, they'll take on the debt from the previous regime or sometimes forcibly. It's like, I think we mentioned the debt that Greece owed. They were forced to take it on after World War II, even though the debt was forced on them by the Nazi Germans.
Yeah, and there's a lot of, unfortunately, very solid reasons for this happening because, what'll end up happening is that if you don't have somebody take on the debt, there's a systemic risk to the financial system. Like you have to dig you don't necessarily have to dig that deep in history, but like the example that comes to mind is some of the first proper modern banks in Italy would oftentimes they would be the lender for early nascent nation states in the early Renaissance. And one of the things that England kept doing constantly is not paying back their debts. They would go to these banks, they would borrow a ton of money to finance their wars, and then afterwards, when they won or lost, they just never paid them back, which caused banks to collapse. So it's not great. One more recent historical example I can think of, though, is Haiti.
Yeah.
The debt that Haiti has been paying back famously was forced onto them at gunpoint by the French.
Right.
The French effectively forced the Haitians to pay for their own freedom because, Haitians were mostly former freed slaves that freed themselves. So a lot of people have blamed that forced French debt on the reason why Haiti is so poor today. I would contend there are also other reasons which compounded to this, but the debt certainly didn't help.
Yeah.
But yeah, Russia. Not in imminent danger of collapse, but they have been talking about recently formally declaring war on Ukraine. Did you hear about this?
No, I did not know that.
So for those not in the know, Russia has been at war.
Apparently me.
Yeah, Russia's been at war, like full-on war with Ukraine since 2022. Arguably, it's been in a kind of state of asynchronous war with Ukraine ever since 2014.
They annexed sovereign territory in 2014, and no one did anything.
They did, but that was like the little green men invasion. Russian irregulars showed up in like no insignia and just kind of walked into bases and dared the Ukrainians to do anything about it. And the Ukrainians couldn't do anything about it because they didn't want to fight them. So they weren't in a position to. But Russia has always contended this entire time that they are not in a state of war, and there are strong domestic reasons for that. If they were to be in a state of war, that implies conscription, that implies, mobilizing National Guard. And the one thing that Russia is always really hesitant to do is mobilize people that don't want to fight. They always try to kind of coerce people that are less desirables, like prisoners and like promising death payments to families to try and Shanghai people in, and then later on if somebody dies, like no, they're missing, we don't actually have to pay your family anything.
And then they send in all the groups of people that they do not like.
Right, exactly. They send in, unfortunately, minorities from the Russian periphery to fight and die. It's really gruesome. But if they were to declare a full war, which would enable them to be more on a formal war footing, it enables the Russian government to really do things they probably need to do at this point in terms of war production and war powers. Even a state like Russia does have like institutional reasons why it should be declaring a war if it's going to fight one. But, famously, a lot of the revolutions that Russia has undergone in the past have been the results of people in Moscow and developed areas being conscripted when they didn't want to be. They're given a lot of guns. They happen to be in the capital. And instead of shipping out to the front, they just march on the Kremlin. So, Russia is in a very delicate state right now, I would say. They could definitely keep fighting for quite a long time, especially given that they've retooled their entire economy towards the war at this point. And there's a lot of danger in that. It's a precarious time, is what I would say, for everybody involved. But, for us, kind of doesn't matter, unfortunately.
Yeah, it really... It's a regional conflict at this point. I mean, Russia has shown that we're not going to get in a nuclear war with Russia. I think that's just out of the question.
The one thing that I've taken away from the last several years is that tactical nukes are tactically useless. I mean, the only situation I can really see them being practically used is a war between India and Pakistan.
Yeah.
Maybe a limited exchange somewhere, but it's... There are people far more qualified than me to speak to the subject, but I look at gas prices, I look at oil prices, that's my lane. That's really where I should be staying, but...
I don't know. This trade war with Canada could devolve into a nuclear war.
Yeah. Yeah, does Canada have nukes? I don't think Canada has nukes.
Aren't they?
I think they're under our nuclear umbrella.
Oh.
So
for some reason I thought they had nukes.
No, I don't think they do. I've seen some kind of C movie subplots where it turns out like Canada is hiding nukes in the CN Tower in Toronto. But
Why would you hide it in a tower?
Because it's a fun plot point. Why would you need to do any of that?
Yeah.
So it's not great, seeing all these trade disruptions. Canada is our biggest and one of our biggest and best trading partners, and they speak our language and they're very friendly. So,
yeah. On that note, what do you think? Is it time for this day in economic history?
I think it is time for this day in economic history.
We'll do it then. And today I'm reading it from my phone, not because I am technologically advanced, but because the printer ran out of black ink.
Yeah. Unfortunately, we've moved on to ordering our ink online, as most modern businesses have, which means that when we run out of ink and we haven't, when we're in an interim period, sometimes we'll accidentally run out of ink. So might have to run down to Staples tomorrow, I think.
That was a really detailed explanation for being out of ink.
I'm a very detail-oriented person, Quinn.
Yeah.
I thought you knew this about me.
Well, anyways, again, today is June 27th. We're starting early. 1497.
1497.
Two Cornish rebels discovered that protesting unfair taxes gets you hanged, drawn, and quartered. Apparently, Henry VII didn't appreciate their 300-mile march to London to complain about funding his Scottish war. Their heads ended up decorating London Bridge, which was definitely not the, quote, fame and perpetual immortal, end quote, they were hoping for.
Fame and perpetual immortal. What does that mean?
No, fame, perpetual, and immortal.
Immortality?
Like perpetual and immortal fame.
Oh, okay. So it's just an anachronistic way of saying it.
Yeah. Yeah.
Okay, well, why didn't you say it that way?
Because it was a quote.
Okay, fine. Fair enough.
June 27th, 1871, Japan's government officially adopted the yen on this date, replacing the chaotic feudal clan notes that had been floating around since the 16th century. Imagine trying to buy groceries with money from 12 different local warlords. The first yen coins were, interestingly, minted in, guess where?
The U.S.?
San Francisco.
Yeah,
because
that makes
Japan
sense.
did not have its own mint yet.
Frankly, that's not an unreasonable time frame for them to have a centralized currency. I mean, we still had state-issued currency until after the Civil War.
Oh, yeah.
Like the Secret Service's whole raison d'etre was basically just stamped down on counterfeit currency because it was just so common with how many different banks and states could issue their own currency.
Yeah, and people didn't like the idea of centralized banking.
Yeah, I mean, famously, anybody that's seen the musical Hamilton will know that it was very controversial to have a central federal bank.
Oh.
Many people didn't like that idea.
June 27th, 1884, President Chester, would it be Arthur? I think it's B.
Sounds like one of those presidents that I always forget.
But Chester Arthur created America's first permanent federal agency dedicated to collecting information about working conditions. Bureau of Labor Statistics, which was basically the government's way of saying we should probably find out if people are dying at work.
Man, bless the Labor Statistics Bureau.
Yeah, this happened 20 years before the Census Bureau became permanent.
Wow. Well, I thought the Census Bureau existed in one form or another for a long time.
Before it became permanent.
Oh, I see. Before that, it was more like every 10 years kind of thing and then had to reconstitute itself.
Right.
That makes sense.
June 27th, 1893. Silver prices collapsed to 77 cents an ounce, a devastating 16.5 drop in a single day. When the market finally called the government's bluff on artificially propping up silver prices through the Sherman Silver Purchase Act, which I think they were buying $8.5 million worth of silver every month.
Yeah.
This spectacular crash reduced an American silver dollar to just 58 cents of actual value and obliterated entire mining communities in Colorado, proving that you can't maintain commodity prices through wishful thinking and government decree.
This is why fiat currency is fantastic. You know? Yeah. Like, it has its drawbacks, but it's still better than basing your entire currency system on a commodity.
Yeah. And it was part of a wider economic panic in that year.
Yeah, it makes sense. You know, the Wizard of Oz was famously based on a book which was trying to promote the silver standard. Because they couldn't come off the gold standard, so they wanted to add silver to it so that there could be a little bit more flexibility in the currency.
Yep. June 27th, 1954. The Soviet Union opened the world's first nuclear power plant in Obninsk, generating a whopping 5,000 kilowatts, barely enough to power a modern shopping mall. They even wrote a commemorative poem called Atoms for Peace, because nothing says we're not building bombs quite like nuclear poetry.
Yeah.
June 27th, 1967. Barclays installed the first automated teller machine in Enfield, London, using paper vouchers instead of plastic cards and dispensing a maximum of £10. First person to use
Maximum of £10 per person?
Yep.
Ooh.
The first person to use it was Reg Varney, a sitcom actor famous for playing a bus driver.
Okay. Interesting. I'm sure he was the Jerry Seinfeld of his day.
Oh, yeah. June 27th, 1972. We're getting closer. And actually, I meant this to be in order, but I guess it's not. June 27th, 1972. Nolan Bushnell and Tad Dabney incorporated Atari with just $500, launching the video game industry with a game so simple it consisted of two rectangles bouncing a square back and forth. Bushnell later turned down a 1/3 stake in Apple for $50,000, a decision he described as being, quote, so smart.
Yeah, I mean, how are they really supposed to know?
Yeah,
I mean, unless you go back in time, are you really going to know Google's going to be the next big thing?
It's like you look at Nike. It was a terrible company when in the 70s.
Yeah. I mean, there was a point at which, like, American Express, people thought it might go bankrupt.
Yeah.
That was actually the story we talked about with Warren Buffett earlier today on our webinar. Go check it out if it's posted somewhere, which I'm not sure it will be.
I don't think it is.
Okay, well, in
But
that case,
come to our next webinar because we might tell it again.
Yeah, come to our next webinar. We got interesting stories.
Yep. And I've got just a couple more and then a longer story. June 27th, 1950. The Korean War begins. President Truman committed U.S. forces to Korea without congressional approval, launching America's first police action that somehow lasted 3 years, cost 37,000 American lives, and the military budget exploded from $13.5 billion to $50 billion, accidentally creating the military-industrial complex and jump-starting Japan's post-war economic miracle as America turned to Japanese manufacturers for supplies.
You could argue that the Korean War was just an elaborate way to pump money into the failing Japanese economy. But, it also famously spawned one of the most watched series of all time, MASH.
Yeah.
The MASH season finale, fun fact, I was actually just looking at this earlier today, had over 100 million viewers tune in live.
Wow.
There's not been a finale, I think, that has topped it since.
Even the Friends finale?
Even the Friends. Actually, Seinfeld was higher than the Seinfeld finale had, like, I want to say north of 90 million people tune in. The Friends finale only had north of 50 million people turn in.
Well, I wonder if Futurama has it beat if you add up all of the finale episodes.
I mean, you're talking about people looking at the same time. Like people tuning in.
So. Okay. June 27th, 1985. The American Association of State Highway Officials officially decommissioned Route 66 after 59 years, removing all the signs and turning the Mother Road into a memory. The irony is that Route 66 became more famous and economically valuable as a tourist attraction after it died than it ever was as a functioning highway.
Now, when you say they like decommissioned it, does that just mean they removed the signs or?
Yeah, they removed the signs.
So the road still existed.
Yeah.
Yeah. Okay.
But it was no longer didn't need to be maintained as a highway.
Okay, I see. So yeah, I mean that would make sense.
Yep.
That's in keeping with the Cars universe lore,
right?
Know? Yeah.
And this I thought was an interesting story that and no peeking.
I'm not looking. I can't read that. Think I can read sideways?
Yeah, I do.
You're right.
The Chicago banking crisis of June 1932. So, June 27th, 1932, fell smack dab in the middle of Chicago's spectacular banking meltdown, where in that week, 26 out of 40 in the month of bank failures. It happened in just 1 week. The star of this financial disaster was John Bain, a 64-year-old former plumber who apparently thought banking worked like plumbing, except instead of fixing leaks, he created a $13 million money leak. Bain had prospered in real estate, then branched into banking, building a chain of 12 banks by borrowing more than $1.8 million from his own institutions to fuel real estate speculation. One of his banks was literally founded with zero capital, relying entirely on temporary loans from other banks in the same doomed chain of banks.
Wait, so he was just multiplying the amount. Okay, so what would happen is he would have like $1 million in one bank. He would loan it to the other bank, which would then lend it out to another bank to start up another bank. So he was fractional reserve banking by other means.
And it gets worse. So Bain's 12 banks collapsed on June 9th after investigators discovered they only had $390,000 in cash against $13 million owed to 150,000 depositors. That's a 3% reserve ratio, or what mathematicians call impossible.
That's actually not that bad.
Okay, but
it's not as bad as I thought.
390,000 cash on 13 million?
Believe it or not unreasonable. The reserve ratios can go as low as 2% and be reasonable.
Okay, but hear me out. The court's assessment released on June 23rd revealed that the banks had total assets of only $3.5 million.
Okay.
In total, against the $13 million of deposits.
Wait. So they weren't even lending it out?
No, it's because it was a chain of banks lending to each other.
Oh, geez. Okay, that's really bad.
$390,000 in cash is crazy.
Okay, well, no, you need to reframe that because what you just told me, like, there's a difference between the reserve ratio and and the assets on hand, because the assets should be roughly booked against.
So the assets should be more than 13 million potentially.
Yeah, potentially.
But they only had 3 million in assets and 300,000 in cash.
That is crazy. That is actual insanity. So what he was doing is he was quadruple counting all of these loans, and then when they actually unraveled it, it was like, oh wow, you've actually only made a loan of 3 million in size. So, well, that's also just dumb because he could have been making actual loans. That's not
well, again, he was a plumber turned real estate investor turned chain banker.
Yeah, I know. It's just boggling my mind because it almost would have been easier for him to just make bad loans.
So Bain cried during his court testimony as angry depositors booed him. His punishment? It was 1 to 5 years in prison for losing $12.6 million of other people's money, which works out to be about $2.5 million per year of potential jail time.
The real problem here is he wasn't doing the actual work of a banker.
No, it was a mess. The panic peaked on June 24th when lines of depositors, and it was reported as mostly women, clutching their pocketbooks under both arms.
I'm sure that made it for a great visual.
Yeah, and the banking crisis was supercharged by the simultaneous collapse of Samuel Insull's utility empire, which had securities with a market value of over $3 billion and combined earning power of $500 million annually. Insull's network of gas, light, power, and transit companies spread over 32 states, serving some 10 million people. When his empire began unraveling in 1932, it destroyed billions in wealth concentrated in Chicago, creating the underlying asset shock that triggered depositor fears. The Chicago Rapid Transit Company went bankrupt in 1932, triggering a chain reaction of failures within Insull's network. This wasn't just a corporate failure, it was an economic nuclear explosion in a single metro area that made depositors question whether any Chicago institution was safe. And the stock market carnage was equally precise. Unrelated to Bain, Central Republic Bank's stock price fell from $52 on June 18th to $47 on June 25th, and then plummeted to just $4 on Monday, June 27th.
Oh, wow.
A catastrophic 92% decline in 9 days that made the bank's stock worth less than a decent lunch.
Ooh. No, that would have... There's a reason the FDIC exists.
Yeah.
You had to have... This is why... People forget that this happened regularly. We saw this kind of with First Republic a little bit. An echo of an echo. But, back in the day, you used to get, proper bank failures.
Oh, yeah, and runs on the bank because it just spread like wildfire. But interesting, perhaps the most revealing aspect of this crisis was where the money went after panicked depositors withdrew it. The Postal Savings Department increased its windows from the usual 25 to 30 to around 100 to handle the flood of deposits. On June 27th alone, postal savings received approximately $1 million compared to a normal daily average of $200,000. A 400% increase that proved depositors weren't spending their money, just moving it somewhere else the government couldn't screw it up. At the crisis peak, postal savings were receiving $2 to $3 million daily, 1,000 to 1,500% increase.
And this is why runs on the bank are so destructive, because they're not even using the money. What they're doing is they're putting it somewhere else they believe is safer, which means that you've just caused a massive panic in the system without actually needing the money. The government essentially said, okay, if you're going to keep moving the money around like this, we're just going to blanket guarantee everything because it's the same amount of risk anyways. It's just at least this way you're not actively ripping apart the financial system accidentally. Yeah,
and I think the chair, I don't know if it was of this bank, I think it was of the Central Republic Bank. He was giving a speech to worried depositors, and he said that if you're worried about our solvency, you can go call up the Federal Reserve. But the crisis reached a dramatic climax when Charles Dawes resigned as RFC president on June 6, 1932. He boarded a train to Chicago to take charge of the Central Republic Bank, of which he was still chairman.
Mm-hmm.
Just over a week later, as the Democratic National Convention was about to convene in Chicago, Dawes coolly informed leading bankers that the Central Republic wouldn't open the next morning. On Sunday, June 26, directors met to discuss the emergency, and 3 hours after midnight, with RFC officials in Washington on an open telephone wire, negotiations were completed for a $90 million Dawes loan. The final arrangement involved $10 million from Chicago and New York banks, plus $80 million from the Reconstruction Finance Corporation. The federal government even agreed to accept municipal tax warrants as collateral, essentially backing banks with IOUs from a broke city government that had failed to make payments on municipal bonds just back in January of that same year.
Man, they were desperate.
Yep.
Oh.
By June 27th, the worst was over, proving that even Depression-era financial disasters could sort themselves out in about 3 weeks, assuming you had $90 million in taxpayer money lying around.
Yeah, there's a reason the federal government took on these liabilities. You prevent shenanigans like that. And cities cities may be governments, but they can go bankrupt in ways that central governments don't.
Yep.
So they're risky. It's risky for them to loan out those funds.
And sometimes they make stupid decisions, like the city of Chicago selling off its parking meters to that fund that sold it to the foreign government.
Oh, that was painful. Yeah, I remember learning about that the first time. I'm like, oh no, what are you doing?
It's like a 99-year lease or something stupid.
Okay, paint the picture. It's the heart of the Great Recession, and the Chicago government, which is not known for being especially well run, is desperate for capital. So what do? They go up to their buddies in private equity. I forget who it was, J.P. Morgan or something like that.
Yeah, I think so.
Or Morgan Stanley, and they say, "Hey, will you buy my parking spots?" And they go, "Sure. We want a 90-year lease, and we're going to pay this much amount, which is about what the hole in your budget is." And they go, "Okay." Now, here's the problem with that: you cannot really successful dollar of value you get out more than 30 years is essentially worth $0 if you do a discounted cash flow model. So what the city of Chicago effectively did is they sold their parking lots for a discount for just whatever the fair value would have been for 30 years, and then gave them another 60 years of free parking revenues forever. And not only that, the city of Chicago has to pay them every time they try to remove a parking spot for something like a bus lane. It's terrible. It's horrific. They have no control over the public right-of-way anymore.
And that bank sold it at a profit to a foreign government. It was a great investment because it was a terrible deal for the city of Chicago.
I've never seen a worse deal in the history of deals. It was just absolutely painful.
Yeah. On that painful disappointment, this has been The Capital Call, and I'm Quinn Milligan.
And I'm Drew Milligan.
And we'll see you next week every Monday morning. So stay liquid.
Stay liquid.